There's a moment before every implosion where everything feels too still, like time itself has hesitated, as if it knows what comes next but refuses to say it aloud. That's where we are now. On the edge of the precipice, listening to the silence before the scream. The year is 2025, and the scaffolding of the global financial order is groaning under its own weight. A tidal wall of $7.6 trillion in U.S. Treasury maturities looms over the markets like a mythic beast, one that doesn't breathe fire, but debt. Behind it, the dollar trembles. Trump's tariffs rip across continents like economic napalm. Supply chains fray, trust unravels, and inflation waits patiently in the wings like a ghost with unfinished business. You can feel it in the charts. In the spikes. In the liquidity draining out of the world like oxygen from a sealed vault. The Federal Reserve is boxed in, trapped between the wrath of a slowing economy and the specter of uncontrolled inflation. Foreign powers, once eager suitors to the dollar's prestige, are now backing away, like guests eyeing the exits at a party that has gone on too long. China sheds treasuries with surgical precision. Japan's yen strengthens not from growth, but from retreat. The dollar, no longer the axis of confidence, is becoming a weapon, one the US is willing to let break if it means winning the endgame. And in that atmosphere, thick with tension, rich with risk, one question matters: what do you hold when the world starts burning? You do not reach for hope. You reach for strategy. This is not a checklist. It's not a portfolio. It's a philosophy of survival. The first rule of protection is not to avoid the storm, but to be the last thing standing after it hits. Let's begin with what the establishment clings to even when it falters: short-term U.S. Treasuries. Paradoxical, isn't it? That the most broken element of the crisis is still your safest anchor. These are not investments. They are lifeboats. 1 to 3-month bills yielding north of 4.2%. They offer no growth, no thrill, but they are the last asset to fall when all others collapse. You don't hold them for profit. You hold them so you don't drown. But remember, if inflation spikes or confidence evaporates faster than expected, even the lifeboat can feel the ripple. Short-dated, yes, but not bulletproof. Then, there is gold. Not as a shiny relic of past empires, but as the metal that refuses to bow to anyone's politics. In April 2025, it dances above $3,500 an ounce, impervious, aloof. It doesn't care about your spreadsheets. It doesn't blink at your models. It sits in vaults and tells the truth. The truth that trust is fading. The truth that governments can lie, but scarcity doesn't. The truth that in a world of infinite printing, only the finite will matter. Yet gold can stumble when confidence rallies. A ceasefire, a rate cut, a dollar rebound, and this ancient shield may shimmer a little less. It doesn't yield. It only waits. And Bitcoin. Ah, Bitcoin. The rebel asset. The digital leviathan. It is not polite. It does not wait. It crashes and resurrects with the rhythm of chaos. $93,400 and climbing, sanctioned by Volatility, yet whispered into the halls of power by none other than Trump himself, who has now declared it a strategic reserve. This isn't just crypto anymore. This is a new pillar of monetary mythology. Bitcoin doesn't just rise. It breaks time. It rewrites history. And in a world hemorrhaging from central bank psychosis, that might be its greatest gift. But the gospel of Bitcoin is not for the faint of heart. It swings. It bleeds. It corrects with no warning. A tweet. A tax law. A blackout. It gives power, but demands belief. There's also real estate, not the suburbs, not the speculator's sprawl, but the citadels, Manhattan Towers, oceanfront Miami, glass fortresses in Los Angeles. Places that exist not for living, but for surviving. The numbers don't lie. Home prices are up 4% this year, even as rates rise. Because when systems implode, the wealthy don't run. They anchor. But beware, Fortress or not, real estate doesn't run. It doesn't pivot. It doesn't sell at midnight when markets collapse. And if you're leveraged, the very walls can crack. And then, there are the currencies of others. The euro, the yen. Tempting sirens of temporary strength. They may rally while the dollar bleeds, but when the global tide pulls out, they will suffer the same fate. Their economies, too, are shackled by export fragility. You don't bet on them. You flirt with them. A dash, not a meal. And like any flirtation, timing matters. Hold too long, and the charm fades. Their central banks are just as trapped, just as fallible. And let us not forget the real shadow bank of our time, stablecoins. Tether. USDC. Digital dollars wrapped in cryptographic skin. Tether alone now holds more treasuries than most countries. These are not just tokens, they are the bridges between old money and the next empire. They whisper in the dark, even digital assets crave the familiarity of sovereign debt. But in the event of a true liquidity crunch, even the bridge may buckle. Redemption risks. Regulatory attacks. A slip in peg, and confidence can drain in seconds. But that is only phase one. That is your armor. Your shield. What you hold as the crisis begins to unfold like a map of ancient wars. The real brilliance comes in phase two, when the panic hits, and prices fall not because they should, but because fear has taken the wheel. When the S&P nosedives 20%. When yields spike beyond 5%. When the Fed, out of options, begins to print in silence while speaking in riddles, then, you act. Cash becomes a weapon. Not to hoard. But to deploy. Because the great trick is not just to survive the storm, but to buy its ashes while they're still smoldering. You borrow against your fortress, your treasuries, your gold. Not recklessly, but strategically. You take the 4% yield and use it as collateral for 2.5% loans. Then you scan the battlefield. Blue chip stocks disfigured by hysteria. Bonds trading at discounts like fallen angels. Real estate begging for bids. And you strike. This is the alchemy of downturns, turning safety into leverage, leverage into access, access into asymmetric returns. You do not fear Bitcoin crashing 20% during the chaos. You expect it. And you accumulate. Because when the narrative returns, when the institutions come running back, you will already be there. You do not chase speculative plays in foreign markets under tariff siege. You stay where power remains. America, even bruised, still prints the currency of consequence. And when the smoke clears, you're not just intact. You're ascendant. This is not just a forecast. It's a manifesto. A call to those who understand that wealth is not built in calm. It is forged in moments of rupture. It is held by those who dance with risk, but sleep beside discipline. So hold your treasuries like a monk holds a rosary. Embrace gold like it's your ancestral memory. Trust Bitcoin like it's a mad prophet with perfect vision. Buy real estate not for returns, but for sovereignty. The playbook is written. Now execute it. And when the world asks why you're still standing while others sink, you'll smile, not with arrogance, but with the quiet knowing of someone who listened before the thunder rolled. This is FluxFolio Finance. Where the chaos is decoded. And the future, owned.